All right, so hello and welcome everyone to this live intraday strategy webinar on SB Trade Desk. We are coming into in just about 5 minutes the retail sales data out of the United States. We'll give you that print live. As always, feel free to throw out any questions, trade setups you guys are looking at. Be more than happy to review that. So, it's been an interesting play over the last 24 hours. Obviously, for those of you who've been following the swing scalp or the swing setups, 118 finally did, or 117 rather. Finally did tap here on the dollar yen. From the scalp setup, we published a piece last night around 10 o'clock as we were making it finally into that 1755 target. Here's what we were looking at yesterday in the webinar. And certainly the break or the near-term bullish invalidation we were looking for is 118 to 118.17. We got a false break of that yesterday. We came back and checked the bearish invalidation level, which we had brought down to 118.80. That held. Again, the break there, giving you a nice move into 1755. Subsequent targets were 1722 and the 117 handle into 1695. Here's what the live chart looks like for dollar yen. Okay, I tweeted this one earlier last night as well. As we closed, below that 118 level, specifically for the close of yesterday's trade, keeping the downside bias in focus. This 116.95 level, guys, is a 618 extension off the high. We are also looking at this operative median line, which comes right into the confluence of that region as well. So near term, you might come into a little bit of a support bounce here. Momentum is testing that momentum trigger that dates all the way back to the lows you made back in June. So a little bit of caution here warranted for short exposure on the dollar yen. This was the inevitable target here. Here's what the intraday chart looks like for dollar yen. And certainly this is one we'll be watching as we get that print in just a couple of minutes from the U.S. retail sales data. So the triggers were a little messy, I'll give you that. The best trigger that actually panned out yesterday was the actual break here below that major key level. The median line bisector of the descending channel was in there as well. And certainly that opened up those downside targets. At this point, I just want to zoom out real quick, guys, and show you the broader trade. We're still struggling broadly within the confines of this descending pitchfork. So I'm going to use some caution here. Again, 1695 is going to be that 618 off the high. If you see a push lower here, okay, if we go back to the daily chart, is really what you want to focus on. You're looking for an 88.6 retracement off the low, and that brings you into 116.15. Okay, so that'd be our next downside near-term target, followed by 115.50. On a scalp basis to the upside, if this thing recovers, 117.22 is what I'm going to bring down the bearish invalidation level to. So as long as price stays sub 117.22, we'll look for those short triggers. We'll look for opportunities to get back on the shorts from a scalp standpoint. But right now, you're testing that 786 retracement at 116.67, and you're going to want to sit back a little bit and see how the U.S. data comes out. Here's what here's what the retail sales data is expected to be, guys, in just under 3 minutes here. Advanced month over month, we're looking for a contraction of 0.1% for the month of December. Core, or ex-auto and gas, if you strip out auto and gas, is looking for a gain of 0.5%. So we'll be getting that release in about 2 minutes here. And in the meantime, we'll go ahead and bring up some near-term charts here so we can just look at what immediate price action is reacting to. But the dollar yen focus, guys, is going to be on the lows that you made last night for the European Open here. The other trade I do want to also look at is the Aussie, and I want to show you the chart. Do I have time? No, we got 30 seconds. The Aussie also looks like it's in a consolidation right between a key area. Here's what it looks like on the intraday for the Aussie. So the focus is on either a break of the opening range high for Europe or a move back below 81.16, which again was the near-term invalidation. And survey says in 5 seconds, advanced retail sales for the month of December, we're looking for negative 0.1%. Survey says negative 0.9, worse than expected. You're seeing a little bit of a dollar turnover in the CAD. Aussie coming higher. So for the Aussie trade, guys, look for this trend line right here to give out. If it does break, you're looking for a possible recovery right back into 82, or this region around the 82 handle. On these types of prints, I don't like to jump in right off the bat. Want to see if the sort of market levels off here, but you do have core X auto and gas coming in also weaker than expected, negative 0.3% versus 0.5. Import price index also slightly better than expected, looking for negative 2.7, came out negative 2.5, a little bit worse on the year-on-year print. So a mixed batch of data, nonetheless, a broadly weaker report here for the United States, guys. You're even seeing some downward revisions for last month's read. So last month we got 0.7% on the advanced retail sales. That dropped to 0.4. X auto, if you strip out the autos month on month, you're looking for a flat read. That came at negative 0.1, downward revision from 0.5 to 0.1%. So certainly not a very positive release here for the U.S. Do keep in mind, later today we do get the release of the Federal Reserve's Beige Book, and obviously that's going to be an updated assessment of the Fed's 12 districts. May not be quite as big as a market release as we typically see unless there is some sort of indication here that we're seeing some of that progress start to deteriorate or start to slow down. You can see here dollar CAD right back, almost break even. Your dollar yen holding right at the lows, 1650. Remember that's the level we were just looking at in the scalp. Okay, and that's the lows. So if we push through this in this candle close, guys, we'll be looking lower. Again, look for a soft target right at the 116 handle, and then the daily chart brings up that 116.15 level as the 88.6. So that's a near-term target for the dollar yen. Aussie dollar also, if we break back into the confines of this, you could see a recovery back into those highs that we made last night. For those of you who were on Twitter last night, I posted this pic. Well, I don't want to waste time bringing it up right now, guys, but it was basically highlighting this region as we came into that 82 again post the U.S. close last night. You had a nice triggered momentum here, not only the basic momentum trigger, which came off the lows for the week, which was tagged 4 times, so these are going to be very, very stringent triggers, but also the former resistance trigger that gave out, giving us that run just shy of 82. Yeah, that acted as a nice trigger on the downside too. So even if you had missed this a little bit and jumped into the short a little bit lagged, you had plenty of time here to sort of grab your 20, 23 pips per scalp. So it looks like if we break through this again, guys, near term, I don't have any positions open on the Aussie as a disclaimer, but we'll be looking for that move higher into a possible stretch into the 81.95 level again. So on Jamie's charts, guys, I do just want to review with you how we're going through this, both on the near-term and medium-term trade. So this is the operative structure that we were working with all throughout the course of the ascent off last week's low. This break here offering really nice pivots, guys, okay, both on the break and back in the recovery inside. So we're looking for a move into the 81.95 level. And one thing you want to keep in mind, sorry about that, is this type of pitchfork, a little bit longer dated. And if you draw that, it matches price action pretty well. Now you saw these spikes break below. Interestingly enough, if you match that slope, sorry guys, a little bit of a lag here. If you match that slope, it actually pretty much catches these lows to the pip. Okay, and that's what you're seeing what Jamie's looking at. So we'll be looking to see, here's the median line parallel again. That comes just ahead. My whole point of doing that is that the median line parallel comes just ahead of that 82 handle, right around 81.90 right now. So we'll see if that offers a hold to the upside. At the end of the day, guys, yesterday's piece, still all those levels are valid. So for the Aussie, here's what we published yesterday as we came into that major key support target. Near term, okay, we're going to remain that bearish invalidation at 81.16, which we broke above in an overnight trade. So above this, you don't want to be looking necessarily for shorts unless you get a compelling hold at 60 and a short trigger here in momentum. If this thing rallies into 82, into a nice momentum trigger break after a hold at 60, that might be an opportunity to fade it. That being said, above 81.16, you're really at risk here for a little bit of a pull higher. Remember the broader picture, and I showed you guys this earlier last week, if I'm not mistaken, with the Oz on the weekly charts. Okay. There we go. Okay, and the premise is still this major key support area for Aussie dollar. Okay, so 81.16 is the same exact level we're looking at on the daily chart into 80.65, which is the stretch lows from 2010. That's still the major support structure that we're fighting against on the short side. So wouldn't be surprised, actually, if we do see a little bit of a move higher here near term for the Aussie. Okay, inevitably we'd be looking to sell it near term. Watch that median line off. The lows that we made, what day was that? December 23rd? December 23rd. Questions on the Aussie. Just back 20 pips in Aussie dollar. Pooja, nice. The other half at 81.90 thanks to your post last night. 81.16 bearish invalidation. Cheers, Pooja. Again, you're the one placing the trade, so well done. And guys, I hope you guys are on the same page with how we're using these bearish and bullish invalidation levels, right? It doesn't necessarily mean, if you're following a larger encompassing position here, that it's going to invalidate that bias, right? We're talking real near term here on this intraday basis. So for us, the post last night, a break here, we're looking for 80.80. At the end of the day, 81.16 is bearish invalidation. The pop above 80.16 should have taken you out of any short side exposure from a scalp basis, okay, from a scalp basis. So we'll look to see if that stretches into that median line here to the upside on the back of some weaker than expected retail sales data here out of the U.S. Well done, Pooja. All right, so those were two of the setups that we've been sort of in focus on here so far. On the Aussie dollar and the dollar yen. Any questions on either of these? Okay. I'm interested to see actually what Sterling CAD is doing, guys. I didn't give an update on this one last night. It's been kind of lackluster, and last time I left off, it was stuck on that 81.55 level to the upside. Unable to really make any type of progress through that. Okay. Here's... Oh, and we did break an overnight trade. Sterling CAD. Sure did. All right, so actually this was a great opportunity that we missed out here on. Some nice triggers. So here's what it looks like on the, again, from last night's piece. On the Sterling CAD. And basically, guys, what I wanted to say is this. We said that the scalp bias remains constructive while within the confines of this ascending pitchfork. And I understand that this right here looked like we broke out of the pitchfork. But guys, we want to be dynamic with regards to what level is doing as well. I know that this broke the pitchfork, and technically we should have been looking lower. But if we look at the momentum signature, guys, there has been nothing but a constructive signature since that break. Okay? When price laterally moves out of these sloped trend lines, whether it's a formation of a pitchfork, a channel, a triangle, when price laterally moves out of that, it really invalidates the use of this of being any type of trigger, right? And the fact that momentum held 50 the entire way, really there was no reason for us to invalidate the long side of the trade. The only trigger, guys, that I see here that might have been something you would have jumped on, honestly, would have been a 60 break. I bet if we jump into this a little bit closer on that move above 81.55, you'll see a little bit clearer of a trigger break there in momentum. And there it is. Okay, there's a 60 break in momentum that took you right above that 81.55 level. Long against that session lows, the Asia Pac lows at that point were right around 81.27. Remember, this is a healthier scalp. You're looking for 35, 36 pips. You did a pretty good job there. All right, even on the pullback, former resistance, now support, momentum, supported by 50. As long as we continue to hold in this quadrant, guys, You don't want to necessarily fight the trade. And again, I mean, this one, there shouldn't be any surprise. The whole point of yesterday's sort of cautious commentary was, look, guys, if you recall, sterling CAD is something that we wrote about weeks ago. Okay? Or not weeks ago, a week ago, as we were heading into this major key level. It was on the 7th that we issued the long side against this major key support. We came right into the pitchfork support, and here we are, a couple hundred pips off the low at this point. So I am looking for near-term resistance to come in a little bit higher than where we actually stretched into. Okay, looking for that pitchfork or that median line bisector off the lows from September. You also have a 786 from decline off of the December highs, but more importantly, the November high day close comes in right here as well. Okay, so the top side targets for sterling CAD I think are exceptionally clear here. Your major focus is 82.55, 82.63, and then 83.08 is going to be massive. Not only is the 786 retracement off the broader decline, off the August highs, but also it's going to be the December high day close. Okay. And it's interesting because you're seeing here again on the daily chart momentum approaching that 60 threshold to the upside. Near term will remain constructive above 81.55. That's going to be a bigger target in my opinion, just on the account of all the things that are lined up here. You have a 618 retracement off the high. You have the 200-day moving average. Okay. If you look to the left here on the cursor, you caught the close highs for September. And there was one more thing. And the actual stretch low for July. Okay, all come in this region. So we'll use that as near-term support. Remember, it's a wider range scalp, guys, so not something you want to be scalping for 10 or 15 pips. This is one of the ones that you really want to let run a little bit once you get the play on it. Here's what it looks like again on the 15-minute. Zoom it out into the 30. Okay, watch for some divergence here. Watch for some divergence. So the same trigger that we used as support, which didn't really yield much on the upside, although it did pan out, we'll go ahead and stretch that to that new high. And again, off the mark right now, you're getting higher high, lower high. Watch where this peak ends up happening as we open up U.S. trade. If it does hold below 70, it could be another sign again that near-term exhaustion might be about to set in. All right. Any questions on sterling CAD? Still, operative trade remains weighted to the upside above 81.55 here. Petra says, hello, what would be the daily close level on the U.S. dollar to get a meaningful correction going? Great question. I haven't been following the U.S. dollar because the price action has been so lackluster and so, for lack of better words, boring to me. I haven't really been using this index. This index works as a great tool, guys, in being able to ascertain what the base core dollar movements are doing. Dow Jones FXCM dollar index is an equally weighted average of the euro, Aussie, sterling, and yen. And so unlike the ICE dollar index, which is a larger basket of 6, differently weighted, barely heavily weighted the euro, rather, this will give you a little bit better of a picture. But since the start of the year, it's been real lackluster. I mean, what do you call that? A channel break to the upside? Because I don't. At the same time, you've been getting ridiculous divergence for months now. So I don't really want to stress the movement on this. A close, and this is what I've been saying since last week, Petro, a close below 1155.80 would be the only thing I'd be looking for to invalidate the near-term upside bias here for the greenback. Now, this trigger looks like it's giving out. We got a false trigger like this earlier last month that didn't do jack. It was the biggest fake out ever. I remember this vividly because it was right ahead of vacation. We were thinking, okay, we're finally going to get the dollar pullback before the end of the year. Yeah, that didn't materialize at all. So it looks like this trigger is about to give out again. Honestly, let's see a 60 break before we start getting all excited about necessarily taking a position on the index. But certainly this does suggest that the other trades that we've been focused on, or it gives a little bit indication or conviction on the other positions that we've been looking at, specifically the short dollar yen. And near term, with the invalidation we got last night, even along Aussie dollar. So Petro, hope that helps. Again, for me, I'm just waiting for some near-term conviction of a near-term high being put in place to strap on here a retracement. The highs, the peaks have been very short-lived. before surpassed. There hasn't really been a stretch of any 4-week span where you had a high in place except here in early October. And that high stayed in place for about 4 weeks before we broke it. Ever since then, there hasn't been a high that's been respected for longer than a week. So I don't really have, that conviction to tack on what a basic retracement would look like on this. And for that reason, I haven't really been focused on this one too much. Hey, Sandy, great to see you in the room. Jonas says Sterling Oz has been a wildcat today. Sterling Oz? I'll bet. I haven't even taken a look at that this morning. Let's take a see where that's doing. Sterling Aussie. There it is. Petrosella says it does help. Thank you. I appreciate that. All right. Huh. So this was featured. This was featured on SB Trade Desk, guys, last week. And if you recall last week, by the way, we'll go over gold in a moment for sure. By the way, guys, you can always go to the previous session scalp log, okay? And this will take you through all the logs of the trades that we followed last week. So at the end of each week, I'm going to archive all of the remarks and all the charts so that you can sort of keep an eye of what we've been following. But if we take a look at Sterling Oz, where is it? Where's the report? Here it is. Okay, this is what the daily chart looked like. Here's what the daily chart looked like. This was back on the 5th, and here's what it looks like now. The basic premise of the trade is that we were looking for this invalidation level here. Do you remember? 87.65, 88 handle, major key support. You're looking at a nice confluence. And a break below this, you're looking for 86.50. You're looking for this major key region, but we're trying to stay constructive above this level. Okay, what happened? So on the following day, on the 6th, you finally got that break and closed below, shifts the bias downward. Okay. Not only that, you got the momentum break in RSI, that confluence to break below that major key support at 87.65. All the targets got taken out, including the soft target 84, but look what happened on that rebound, guys, on the reversal candle. Okay? Momentum. Exact rebound off 40. It's exactly what you want to see if the broader uptrend is still in play. Okay, so for me, not gonna sit here and play jokes on you guys and tell you I played this. I didn't get a chance to get on that position, but certainly for me, near term, I'm looking for a break back above these trigger lines, which have served us so well over the last 4 months, and I'm looking for a move back above the same bullish invalidation level is now going to be the bearish invalidation level. Okay, so if we get a pop through this, Jonas, I do think tack on a quick retracement. You look for the monthly pivot. You look for a recovery back, towards that 190 handle. Here's what the intraday chart looks like on Sterling Oz. Let's see how it's panning out. Right on. So, looking at this, obviously in hindsight, it's going to be a little bit different. But looking at that, it looked like this break that we made on Tuesday, guys, or what is this? Past, I guess the open on Monday, was a nice break of the initial weekly opening range. And this is typically what you want to see. You break the opening range high, you're bullish against the lows. The scalps to the upside find a new high. Every pullback respects the former opening range high. And you continue to favor the long side of the trade while above that pivot right around 85 handle. Now, it just so happens that ever since that break that you did see on Monday, momentum not only came from sub-oversold conditions, but every pullback, 40 hold, 40 hold, 60 break, 50 hold here might be losing some efficacy, but you get the picture. Okay, so let's clean up this chart. Bear with me one sec, guys. Let's just get some fresh levels on here. Sorry, guys, a bit of a lag here on my PC, so just bear with me one moment. Let me clear up some stuff here. see if there's any symmetry to it. Yep, looks pretty good. Okay, some possible formations here in play. We'll see how this pans out. Okay, we'll work with this for now. Either way, pitchfork support comes in at 86.50, which is going to be a soft target that we were working with anyway. That was actually the stretch low that you made for the opening range last week. You've gotten some pivots off that. So also was the stretch high that you made here on Tuesday, I guess Tuesday. It's early Asia Pac trade here. So we'll see how the Sterling Oz look. Look, if the Aussie rally continues, my only problem with this one, this is for Jonas, is that Aussie gains might outpace that of the sterling, and I think you could see this thing fizzle out. At the end of the day, it's the same report, guys. Nothing's changed. 87.50, 87.67 is going to be the invalidation level. This is what the bullish invalidation level was last week, and for me, personally, humbly, this is going to be what my bearish invalidation level is this week. So we'll see if we can get up to the top side. I do like the momentum signature. It looks extremely constructive from my standpoint. You've seen a lot of long triggers playing out really well. You've seen a lot of rebounds off of 40. You've seen multiple breaks into overbought conditions. So the momentum looks pretty strong just from where we are both in the week and what the Aussie is doing in and of itself has me a little concerned on continuing to favor that long side buy since the close of the week. Interesting setup, Jonas, for sure. Keep an eye on it. But yeah, I mean, play the levels, guys. Play the levels. Constructive near term above 85.80. Bearish invalidation above 87.67. Hope that helps. Sandy, you're talking about that trigger at 4 a.m. here. No way I could get in for the Sterling Oz. Yes, I see what you're talking about. Yeah. A lot of these triggers were really early in the morning, and that's why, guys, feasibly, it's very hard for me to try to get out a tweet for any of the positions necessarily that I'm taking on a day-to-day basis because a lot of these are panning out, off-market hours here in the United States, and that shouldn't be something that should deter you just because you're not hearing from me or Jamie. Guys, we provide you with the levels and the setup, and if the market's there, go ahead. I don't want to see you guys stand back just because you're not getting a tweet necessarily. They've been panning out really well. Sandeep, great to see you in the room. Sandeep, we went over the dollar yen at length, my man, so I don't want to go over that again per se. This will be archived as soon as we're done here, so for sure, feel free to come back and check that archive at your leisure. Sandy says, I'm 1 hour ahead of GMT. Imagine we had a heavy week last week in Paris. Yes, I can imagine. Really unfortunate what's going on over there. But in any event, taking more of your questions. Tuttle, great to see you, sir. Says, what about the 113 low RSI trendline break on the 30-minute? Tuttle, did I miss that, man? Which one was that about? Which pair was that about? The 113 low RSI trendline break. Sterling CAD. Not sure which one you're talking about. Rising trend line from 113. You're talking about in momentum? Yes, right on. Yeah, that would be a decent trigger. Absolutely. Actually, I take that back. That's actually a great trigger. You got 3 points of reference right on there. Well, I remember you've been coming into the webinars and bringing up some great triggers. He says my RSI is 14. Yeah, even on the 30, or even on the 20 here, that's close enough where I'd be comfortable using that as a trigger. Now, the only thing I'd be a little concerned about is this, and let me just see what it looks like on the 14, for argument's sake. It actually looked a little bit better on the 30. It looked like it had 3 points of reference. But in any event, yeah, that could be definitely something you can use as a trigger for the downside. And remember, guys, I feel like I've said this like 10 times this week, but I'm going to continue to drill it into your heads. These are going to be my favorite triggers. Momentum divergence into the high followed by a trigger break is a short. Momentum divergence into the lows followed by a resistance trigger break for a long. I'll use those 9 times out of 10. It's not going to work 100 times out of 100, but more likely than not, those tend to be very, very good triggers for me. So I'm with you on that one. But Tuttle, the only thing I'm concerned about is the length and sheer breadth of the rally. Okay, so right now I'm not really in a zone where I'm necessarily looking to play the shorts. Right, I'm looking for that trigger break for me would suggest that the trade is turning over. That's not maybe a trigger break I'd actually jump into as a entry, but that would shift the downside bias, and we would look for a rebound to get back on the short side. Do you know what I mean? So, guys, there's a difference between a trigger that's going to shift your near-term opinion and a trigger that's actually going to prompt a trade. Those are two separate things. A lot of times, for me personally, on an intraday level, I just like to see the trigger break that'll shift my broader near-term objective. So let's say we get a break below the Asia Pac or the European low. We get a momentum break below this trigger. Great. That shifts my opinion. Doesn't necessarily mean that's the entry, because the stop might have to be 50 pips away. If that's the case, we're only looking for 35. I can't really make a position out of that. So in such a scenario, we would look for a little recovery, a pullback, and then that gives you a little bit better of a risk to reward, and we'll look to play the rebound. So just a quick tidbit there on how you want to be moving through the scalp, as it were, on the levels. It looks a break and about to retest from the bottom. Oh, you're using this trend line. I'm sorry. You're using this trend line. Yeah, sure. I apologize, Tuttle. I see exactly what you're saying here, brother. Yeah. The only thing, again, I'm gonna be a shoe and a thorn in your side here again. The only thing, again, that wouldn't make me want to take an operative position on the long here on this break is your stop would need to be below the session low, which is well over 40 pips, and your entry or your next resistance target's pretty close by. It's only 30 pips. So on a trade like this, your risk to reward quite isn't there. Now, guys, if you're fast enough and if you're nimble enough, yes, on a break above these, you can take really, really, really nimble breaks of resistance on the long side or breaks sub-support on the short side. I'm just telling you from experience, those are the hardest scalps to manage. The hardest. 90% of the time you're taking a trade like that, you're either chasing a position or you're trading event risk, which in both of those positions, a snapback will take you well below what your stop would have to be. And C, your risk to reward is just always going to be off. It's just always going to be off in that scenario. So I hope that's some food for thought there, Tuttle. I was thinking if there was a rejection with a stop from the previous highs. That's how I would play it, Tuttle. That's how I would play it. But again, remember what I just said 2 minutes ago, right? We don't have indication yet that this thing is turning over. So, guys, I mean, we have to take a step back. If we're taking it as a swing setup, Tuttle, where you have a little bit more room, okay? Sure. Yeah, we're coming to major area resistance. If you're willing to put your stop, higher up, maybe against 83 or something. Sure. Yeah, you could probably catch the turn on the ongoing divergence here. For me, from a scalper standpoint, I need the trend near term to shift before I start fighting it. I'm not trying to catch a high on a scalp. Because if you're trying to catch a high on a scalp basis, guys, it can be a very tough life. For the guys who tried to press the short here, press the short here, press the short here, right? I'd rather the market turn. I'll miss a little bit. I'll forego some of that pullback, sure, and then I'll wait for the pullback to get back in on the short side, as opposed to trying to call the high. Okay, trying to call a high and a low, guys, it takes a couple of different stabs, and if you're heavy levered like we are in such a near-term strategy, it can hurt. It can hurt bad. And I'm just telling you this out of personal experience, Tuttle. I'm not scalping with a mini lot. Let's just say that. So for me, I need to be a little bit more. There needs to be a little bit more conviction on there being a firm, ceiling there before I try to fight it. And again, make sure that the daily chart's always in view. So if you look at Sterling CAD on the daily, don't have that much room before you come into your next resistance target. So maybe a stretch into this region with a stop against or above 82.70, that even might make sense with momentum coming into 60 here if we close below. That would be a position I'm interested in, Tuttle, to try to fade it. Does that make sense? I hope that offers some clarity, Tuttle, just on the thought process of how we're going through this. He says, I was thinking if there was a rejection from the stop in the previous high. I hear you. I need to hear the don't pick tops and bottoms lecture every day. Thank you. Yeah, Tuttle, again, it's something we've all done over the years, so you're in the right place, man. I like your thought process behind it for sure, specifically on the scalp trigger. I'm 100% with you. It's just where the trade is positioned right now, in my humble opinion. It might be a little bit tough. I'll tell you what, I will give you a heads up on Twitter if I do take a position on this. I think you might be onto something, especially because you have that momentum running to resistance, but you also have the 70 region right here. So you'll have a couple of different features or technical features that you can look at that would want to take you out of the position. But certainly with the ongoing divergence, I wouldn't be too surprised. Another way you want to also take a look at it is be versatile with your time frames. Go ahead and jump into a 10-minute chart. And see if you can get a trigger that tells you something a little bit closer. Here's a turn ahead of 70 in momentum. On the back of the divergence, right? You're not looking at these wicks. We're looking at the close. Price action. Higher high. Oscillator. Lower high. So I do see, initial signs of exhaustion, and we'll follow this one closely, Tuttle, as we move into the U.S. Open. The best way I would play this is if this continues to hold a range into the U.S. Open at 9:30, and it breaks that range to the downside, then I'd take a short against that high, and it would be a decent play to try to get back into the 82 handle or lower. Not bad. Okay. Gold. Oh, goodness. Oh, goodness gracious. I hope you guys have been following along on that setup because, oops. Oh, this is the 30 minutes. Sorry about that. Because it's been a beauty. So here's what Bullion is doing. So at the end of the day, the piece that we wrote yesterday, or the update that I gave you guys yesterday on SB, was highlighting one major key thing. Okay, and it was the major key confluence at that 1237, 1238 level. This region represents a 50% retracement from the decline off the July high. It represents the actual stretch highs from last month. It represents the low week close on the turnover from 2013 to 2015. And near term, it was that median line right off the lows that we made in November. Okay, so you got that pull, always highs 1243 yesterday, and you closed well below it, right at 1230, which happened to be the close highs for December, or the December high day close, whatever you want to call it. Okay, so you saw that hold, it dribbled back below that trendline resistance, didn't have it, and here we are pushing back through. If we close above 1237, 1238, look for 1248. More importantly, 1262, 1268. And it seems crazy because people talking about a long gold trade at this point, it just seems like, we're out of our minds because we're looking higher. But that's what the technicals have said since the start of the year, guys. There's been nothing that's been bearish about gold since the start of the year. You can make the argument, how can gold trade or, move higher with the dollar? How does that make any sense? It doesn't matter, guys. Price action's moving. This is what we're following. We're not going to make money off the relationship. We're not going to make money off of trying to strap a number on the correlation. We're going to make money off the movement and gyration in price. So right now, with this reversal candle, if we clear yesterday's highs, we're still looking for that move in 1248. As I said in the report last night, bullish invalidation still is all the way down at 1206. So even if this thing takes a little bit of a break here and collapses today, I'd inevitably be looking to buy that as long as we hold within the confines of this formation. Questions on gold? Okay, maybe get that last stretch here a little bit higher here in the Aussie. So guys, those are the setups that I wanted to review with you guys, and certainly what I've been fixated on. It's really mostly more so been the Aussie dollar and the dollar yen and the gold trade that I've been sort of really focused on. Let me know if you have any other questions or trade setups up here as you guys want to look at. Permendra wants to look at the pound for sure. Here's what sterling's doing. Yesterday's UK data, we went over that in the webinar. Weakest that we've seen, or the worst that we've seen in 15 years. But nonetheless, sterling's been rallying ever since. So we're coming into an area of interesting resistance here. It is a confluence region of some sorts, but basically it's the pitchfork off of the high, or the upper median line parallel off of the December high. And also, if you way back, there is a 2009 trend line, which I know you guys have seen before, which was a major support break that we made a few days ago, now being tested as resistance. All right, so the daily chart warrants some caution here, coming into the 40 threshold, and also former support trigger, now resistance. Okay. The major pivot that puts us back on the constructive side is still all the way up at 53.80. So there is some room here for recovery before you start to, invalidate the broader downtrend. Here's what it looks like on the intraday. Let me just bring up the scalp. Okay, so the only thing I didn't like, and I actually saw this break last night. How did I see this break last night? Must have been one of those quick wake up, move the mouse, see the market, and go back to sleep. But I remember I was saying, what the hell is the pound doing? This is the break I was looking for. Why, guys? Very basic. Nothing special. Opening range for the week. Here's the Sunday open. We made a Sunday high. We tested that high 4 times. 1, 2, 3. Break. Came right back. The same pivot. This is the 618 extension right off the low. Nothing special. A 236 off the high. Nothing special. Tested as support. And there's the first real and highest concerted break above 60 that we've seen, since last week. So there's that confluence near term, guys. It's really not that far away. I have two median lines in here in play. The first one is the primary one that you see in red here. This dates back some time, guys, off to the November highs, or I'm sorry, September highs. Okay, really clean. That median line comes right, almost exactly where the current operative upper median line comes in. And that's somewhere around 52.80 or just below. Topside break beyond this, near term, you're looking for 53.30, 53.24. And then the 54 handle would actually represent, or 53.90 would actually represent a nice 618. Near term, this is the focus. And if that breaks, we'll be looking for a move into this resistance region here. Okay? Near-term bullish invalidation level heading into the close of U.S. trade. Near-term bullish invalidation level heading into the close of U.S. trade is going to be these highs, the opening range high for the week, basically the 52 handle, 150, 190. All right, so not a bad setup here. Not a bad setup. If we make it through this region, like I said, hold here. Near term, you are at resistance. You are at resistance. Premenge, does that help? He says, thank you, sir. Hey, more than welcome, man. I do like that pivot range there. So you could get a kickback, but that might offer another opportunity to get back on the long side. There is a trigger here. If you are holding longs, guys, on the pound, if this thing gives out, you got 3 tags, probably going to want to duck out of that position, but it should offer a nice entry back on the long side. Near term, real near term. I know that Jamie's actually looking at a long as well. His targets are up at 53, so it's not too far off from where we're looking. Didn't quite get that spike entry that we needed for the swing trades. I was just reviewing his post from yesterday. He was looking for entry at 50.90. We didn't quite get it on the spike, but just below 53 in my eyes, you have both of those technical formations, which could catch the high here. Again, and this is Permendra and Tuttle. This is why for Pound CAD, this is why I'm a little concerned about continuing to play the long side, because Sterling is coming into resistance, Pound CAD coming into resistance. CAD's been kind of lackluster, right? Despite the pullback you're seeing in the dollar. Dollar CAD per se, not really there. So if the Sterling holds the advance, Sterling CAD might kind of just dilly-dally around these highs. I don't necessarily think you'll get the pullback per se. It could, but near term, that's why I'm a little bit timid on continuing the Sterling CAD setup to the upside. All right. Kevin says, in with Jamie from 150.91. On pound. Did you get the entry on that? Oh, that's right. Yeah. He actually sent me a note yesterday about this. Right on. Yeah. Absolutely. Right on. So you guys are pretty close. You're already halfway through target. Watch 52.50 there, Kev. And if it breaks through this handle here, this clear confluence of resistance, I think you guys are right on. Yeah. That's my bad. I definitely remember that. All right. Kevin says, yeah, it was at the time. It was great. Right on, Kevin. I was sitting right next to him. I can't believe I completely forgot that we were even holding positions in this. I didn't take that position. I was still involved some of the Aussie and the yen shorts. Again, for me, guys, when I'm scalping on intraday, I'm pretty highly leveraged. So, you'll have to pick and choose what you're... to stalk your prey and pick and choose what's going to give you the better bang for the buck. But really nice setup there. Dale says, I caught it too. Right on, guys. I love to hear the success stories. Awesome. So we went over Sterling. Kiwi. Another one that's very interesting here. Not really a fan of doing anything with it now. I just wanted to bring up the scalp chart actually because the levels actually were pretty decent. You got that consolidation break that we were looking for in momentum. I wasn't comfortable with it, either on the downside break or the topside break, to be honest with you. So I haven't really been able to do anything with this. I've been tracking it very closely, but price action just hasn't been all that clean. Technically, guys, if this Monday, Tuesday range, if this is the opening range, then you should stay bearish below this. We're back above it. That invalidates it. So, on a trade like this, I'll just take to the sidelines. We'll see how the week pans out. But no indications that the broader setup on the daily chart has broken out of this consolidation yet. And in fact, we could probably get rid of this pitchfork. Actually, let me see what this looks like. And work with this as the operative. All right. Bullish invalidation on this one hasn't changed either. That's 76.80. That's going to stay that way. It's not only just the lows they made for 2013, but it's also the close low that you made for this year, and it's also going to necessitate a break of this trigger in momentum. So Kiwi might get a couple more days of chop fest here before we start to move on. Pooja says, if you have time, yen crosses. Sure do. Aussie yen, euro yen. Any stabs on the long side there? So before we do that, I'm going to look at the euro dollar, and this is why for the euro in general, I haven't really been as active either. Even the euro Oz, I think, is starting to lose a little bit of efficacy. But for the euro dollar, we started the year with that push below 119.28, which was the 100 off the high that you made in October. And initially, the focus was on 117.42. Today was the first day that we actually tagged it. Despite everything that you saw here, we finally made a tag of it. So I like it. Momentum pushing through 30. If you see this close above 30 on a close basis in momentum, that in and of itself could be a near-term trigger. Really, the bearish side of the trade doesn't get invalidated until you make it back above 1883. And that's a 2010 close low, or a 2010 low, excuse me. So we're close here on making some sort of near-term rebound here for the euro. It's kind of what I've been waiting for, Pooja, to try to get excited on some of the euro crosses. But let's look at the yen crosses that you're looking at here. So here's what euro yen looks like. And certainly that every single support structure that we highlighted just got massacred. If you remember last week, this was the invalidation level, the bullish invalidation level that we talked about. Yesterday's price action clearly went right through it. So I haven't really been, very excited about anything here with the euro yen per se, but what can I say, Pooja? We need to see the euro find some sort of footing. And that's my problem with trying to play anything on this. I'm not going to chase the south side. I'm not going to try to call a low. The stretch and the sheer magnitude of the drop that you've seen from the start of the year has been really, really, really sudden, guys. So I'm not going to try to catch this falling knife. If anything, I would say we'll look at 36.60. That's been a major pivot in price going all the way back to the start of 2014. There's an 88.6 here, which comes in right around 36 handle. Last time I checked, right 35.90, right? And look for a momentum rebound ahead of the 30 level. Okay, as it stands right now, this is the first concerted 40 break we've seen in some time. So certainly the broader long side of the trade here is really being challenged. So not really my cup of tea. Let's see what Aussie yen's doing. Okay, I haven't updated this in some time. Let's see what the deal is. Clean rebound off the 764. Watch today's close. Pooja, not something I want to touch today, but certainly you've sparked my interest with this. So look at the median line parallel that we've bobbled on for pretty much all of last year. Resistance, support, break, support. As long as we stay below 95.60 here, you're at risk. And momentum looks like it has a trigger here. So I would want to see what the close looks like. If the close does materialize with a push below this, price action is sub 94.30. I think you don't want to touch it. The only thing that would put me a little bit more on the camp of a rebound here would be a pullback up above 95.60, which is going to be the low day close for December. But that being said, Pooja, we've been playing the short side dollar yen. That's at major support here. Could see a little bit of a bounce. That's yen weakness. The Aussie rally, if it materializes, could see a rebound here as well, especially if the dollar pulls off on the back of the data that we saw today. So you could get this rebound here materializing into something more. I just don't have any way of attacking at this point. You're too far off the lows, like 60 pips off. Let's see what the near-term chart looks like, Aussie yen. Okay, here's your weekly open. That's a strong trigger, almost 6 tags. And I would designate that as a weak trigger. Looks quite interesting. Nice healthy range, 25 pips about per scalp should suffice. Watch this region here, Pooja, between 95.10 and 95.20, 95.40. Watch this region here. This is what I would say. Actually, I would watch this region. I'm sorry. Take that back. I'd watch this region here. If price is able to surpass this region and momentum is able to surpass these cluster of triggers, I think the broader trade turns over. So there's two ways you can play that. You can see if you get the consolidation here and the pullback, if you get a divergent signal and a trigger to the upside past then, it becomes a conviction trade. Or if you get the break, you look for that pull into 96 and then you buy the pullback on that. The thing that you're looking at here is, what I told you guys before. Here's divergence into the lows followed by a trigger break to the upside. That actually materialized earlier with this. Okay? And a lot of times, guys, when you're taking the triggers, be dynamic. Sometimes it's better to take it off the high in price. Sometimes it works better if you take it off what gives you the most amount of tags. And that really speaks more so to the slope of the trigger you're using. So if you use a trigger like this, long at 94.75 against 35 is still a stretch. Watch the close, 95.40, 95.60, the key range I'll be looking at. Is that stretch low from last week, and also the opening range high for Asia Pac. Or this is the European opening range high. Does that help? Pooja on the yen crosses? I think they're a little premature, Pooja. I think they're going to be a really big player as we get deeper towards the end of December, early February. But right now, I think it's a little difficult to start trying to target the other side of the trade yet, from a scalp perspective. Pedro says, on the euro dollar, we did break the weekly opening range on the downside. Shouldn't we be looking for a Thursday, Friday low? Typically, yeah, 100%. If you're talking about your average run-of-the-mill opening range strategy, 100%. Here's what the euro looks like intraday. Oh, yeah. No. I take it. Well, let me take a step back. Your comment, Petro, is correct in that if the opening range low had broken to the downside, you're looking lower. This didn't give us an opening range break this week. I'm not sure what you're looking at. If you're calling this is the opening range break, I probably would have thought that was too, okay? Except for the fact that we're back above it. So that invalidates it. Right? Guys, the opening range gives you an immediate bias. So if you were trading the euro dollar and you saw the break sub 117.84, whatever the low was, great. Now you're looking lower. That condition, that bias, that outlook only stays constant as long as you're lower sub 1780. Once you get back above 1780, that signal is no longer valid. So Petro, just because it broke the opening range, now that we're back in the opening range, that doesn't mean anything to me now. That opening range break is completely null and void. And you get that a lot, specifically, Petro, on turns. When the market's putting in a low, when the market's putting in a high, when the market's flat or horizontal or range bound, that's when the opening ranges will become very obsolete. And even when you get the signal, if it gets refuted, you can't keep working with that bias, right? So, back within the confines of 1785, my bias is neutral again. We're right in the initial weekly opening range still. Does that make sense, Petro? He says, okay, I get it now. Right on. Awesome. Okay. Pooja says, thanks. I saw the 94.36 rebound, but didn't have the guts to touch it. I just wanted to hear your take. Maybe in play next week, though. Very helpful. Thanks. More than appreciate that, Pooja. Thanks, guys. You really humble me. DB says dollar CAD outside day reversal if it closes below 19.25, and that would be the case. The only thing I want to say to you, DB, and I feel like any time someone asks me about the CAD, I just start bashing them. I don't mean to, but we've had pretty compelling outside day reversals before that didn't pan out in dollar CAD. I was looking at this outside day reversal just below key resistance. This was a key resistance confluence, guys. This is not, fib high. This is a 618 retracement way back to the decline off the highs that you made in 1998, I believe. Or is this I'm sorry. This is the 618 extension off the advance from the lows that you made in 2009. This is off the decline, 1660. So we had an outside day reversal just below that, right ahead of the close of the year. And I thought that was, going to materialize into something too, but it didn't. This is a little bit more compelling, I'll grant you that. So we'll see if it does materialize. But, here's an outside day. There was a couple here in dollar CAD, I remember. In any event, to answer your question, DB, yes. If it breaks yesterday's low and moves lower near term, that would be a trigger. For me, that would be operative if momentum makes it back below 70 on the daily. Okay? Remember, as long as this thing isn't overbought, guys, it can stay there. Okay? So let's not try to fight a trend that's so stretched and there's so much momentum behind it. A 70 break here in momentum and a break below yesterday's low, sure. Near term, from a scalp bias, that would be pretty decent to look lower. I wouldn't be looking much, though. I'd be only looking for a momentum pullback into this trigger or maybe a pullback into former channel resistance. But as it stands right now, we'll have to see if that does materialize into an outside day. Good question. One other thing from the commodity side is obviously we've been looking, you've been hearing a lot of chatter on what's been going on in crude. I just want to show you a quick level. So last week we highlighted a major key level that we came into was defined by 47 into 47.70, 618 extension off the high. You're also looking at the 618 extension off of the record all-time high, okay? And this is a 1618 off the 2011 high. When we call a low in a trade, or when we call a support in a trade that's so heavily skewed to one side, guys, doesn't necessarily mean we're looking long. And this is the thing that I kept on getting a lot of kickback from. A strong downtrend coming to support just means if you're on the short side of the trade, you want to be doing something. Okay, cleaning it up, taking some profit, bringing your books in, bringing your stops in, something. Now, as long as we hold below 46, I think this thing could fall apart pretty quick. I'm not trying to buy it. If we pop back above 46, I keep saying 46, 47, I do think that you could get a near-term recovery. You've been getting ongoing divergence and momentum as we push into these new lows, but divergence sub 30 and divergence north of 70 are going to be your weakest signals, always, at least from my personal experience over the years, guys. So I'm not going to add emphasis to this. I'm just going to point it out that momentum is not able to make fresh lows as price action does. So exhaustion is paramount, and it could be coming up soon. For me, that trigger, if you will, or what would give me the conviction of a near-term exhaustion on the short side would be a break back above this key confluence between 47.02 and 47.70. So I think that's where you start to look for a little bit more of a concerted rebound. This is a critical level, guys. I'm still not going to ignore it for crude. All right, and one other thing, someone here asked for the DAX setup yesterday. You guys got me looking at this thing, and I've been staring at it all morning at this point. But the levels are very clean. Here, I didn't touch this from yesterday's scalp webinar, guys. At the same exact levels, you can see how prices continue to respect these extremely well. This is a 1-hour chart, by the way. So we broke into fresh yearly highs. We came back below the opening range high. Excuse me. So you want to be cautious. Also, yesterday we noted divergence here in momentum as we pushed into a new high. Okay. Long story short, if we break out of this operative structure here, I think you're at risk for a slide here in equities on the German side. So hope that offers some flavor to some of the topics that we talked about yesterday. Sterling CAD moving down rapidly, says Tuttle. Oh, that's the weekly. Watch the trigger. Watch the trigger. Okay, let her pop, then you want to sell it. Okay, you want to let her pop a little bit, recover some of that so you can get your stops as close to 34 pips as you can, and then you want to sell it. The trigger looks pretty good for me. This is what I would have been looking at on a 4-minute if we were looking to actually execute this one. And more importantly, I would have also been looking at this former resistance trigger. So my entry would have been right here. And that probably would have been around 82. The high is 82.40. It's a stretch, guys. If you want to open up your stops a little bit, that would have been a decent entry. I wouldn't jump into it now, but if you get the kickback as close as you can to 82, stop against those highs, the momentum signature, in my opinion, personally, near term here, looks like it's turning over. Nice eye on that one, Tuttle. DAX and the French 40 go almost together, says Sandy. I have fun living in Paris for trading reasons. Changes much from the time in New York. Yeah, you bet, Sandy. You're probably getting the cream of the crop here with these near-term trade strategies, aren't you? I'm a little jealous. I'm not gonna lie to you. Try to get in the European Opens. We got to get in. We got to wake up at 4 a.m. here in New York. So enjoy that. On a tidbit here, if you missed this, and we both did, I didn't take anything on this, but if we do get below the opening range high for the week, okay, that's a clear indication again that the broader near-term uptrend gets invalidated. You look to sell rallies, you look for momentum triggers on the short side. Okay, looks like you could be trying to put in near-term double top here. So, guys, that brings us well over 9:30 here in New York. I want to thank everyone for joining me today. As always, guys, feel free when you're coming into the webinars to come up with your own setups that you want reviewed like you did today. More than happy to go over the trades that you guys are in, as well as the setups that myself and Jamie are looking for. Heading into the end of the U.S. session today, you do have some data on tap. As you head into the latter end of the week, tomorrow you do have Aussie data with regards to the Aussie scalps that we've been looking at, specifically the employment report. And then as you head into Friday, you do get that inflation gauge and the University of Michigan confidence numbers out of the United States, and those are likely to be pretty pretty big too. So guys, we'll end it there. Eileen says, great class. Always glad for your info and others' questions too. See you tomorrow. Eileen, same to you. I appreciate that. Guys, best of luck trading, and we will see you all tomorrow. Cheers.